Hello and welcome. I'm Chris Gilmore, Financial Advisor at Strategy First Financial Planning. Today I'm joined by Jim Parker from Dimensional Fund Advisors. Welcome, Jim. Thanks for giving us your time today.
My pleasure.
As Head of Communications and the marketing team in Australia, Jim Parker creates strategies to communicate Dimensional's philosophy and process in ways that engage clients, prospects, regulators and the media. Jim joined Dimensional in 2006 after 25 years working as a journalist in newspapers, television, radio and online media. And his specialty was financial journalism, particularly in relation to economics and financial markets. Jim holds a Bachelor of Arts in Social and Economic History from Deakin University and a journalism certificate from Auckland Technical Institute. We're in very good company today. So Jim's messaging is powerful in helping investors stay the course, putting things in perspective. And we're very lucky to have him here with us today, where he'll be taking us through one of his most requested presentations, which is understanding media and market noise. So without any further ado, over to you, Jim.
Thank you very much, Chris. And hello, everyone. It's a pleasure to be with you today. As Chris mentioned, my background's in media, so I understand how the noise is made. And what I want to give you today is a little bit of perspective on the news, how it affects markets, and really how you can approach it in a way that doesn't leave you lying awake at night worrying about your portfolio. So let's get underway. If we look at what's happening in the world today, there's lots of worrying things. We've seen the war in Ukraine. We've seen major weather events. This is up in Lismore a year or so ago. They got flooded 4 times. Of course, COVID we had, and more recently we've had the war in Gaza. Lots happening in the world. We've got a presidential election in the US this year. There's a lot of uncertainty there. The question is, what do you do about it as an investor with all the stuff going on in the world? A lot of this is just noise. It's day-to-day news. It's something that you should be interested in as a citizen, that there's not a lot you can do about it as an investor, other than the sort of things that Chris and the team at Strategy First recommend that you do. And we'll go through that very briefly. I want to give you a 5-step guide to filter out some of the noise. So just to basically moderate your reaction to what's going on in the world and don't make rash decisions with your investments. And then we'll wrap it up with key messages and a summary. Now, if we talk about noise, this is what I mean. This was a headline from early 2016. It was a major investment bank, the Royal Bank of Scotland, projecting a cataclysmic year in the markets that year. A global deflationary crisis. They predicted that global stock markets would fall by a fifth. It was going to be as bad as what we saw in 2008. Well, it got a lot of attention, this particular story, and it was on the front page of quite a few Australian newspapers at the time. But if we look at what happened over the subsequent 8 or so years, this is from 2016 to 2023, we saw positive returns across the board. For instance, in 2016, Australian value stocks were the best performers in the world. Emerging markets the following year and so on. The point is that over that period, if you were a diversified investor, that's one that has his risk or her risk spread across a range of different assets, you did very well. And that call by the investment bank was forgotten pretty quickly by the media. This is what we mean by noise. Noise is this stuff. It's the stuff that's happening every day. It's the stuff that Alan Kohler talks about on the ABC News at night. Now, Alan Kohler's a very good journalist, and what he's talking about is not wrong, but it's just a reflection of what happened that day. It's the minute-to-minute news. What you're affected, what you're interested in as an investor is that yellow line. That's the signal, the long-term return. And the job of the people at Strategy First is to get you focused on that signal, not the minute-to-minute news. It's interesting, but there's not much we can do about that. So let's talk about where this noise comes from. What I can tell you as a professional journalist is that the noise is getting louder. There are many more distractions we see today. As you're aware, if you've got a mobile phone, you've got news and noise coming at you every minute of the day. It's becoming more frequent. There are 2 major forces driving this. One is the speed of the internet, the information revolution. The phones in our pockets are more powerful than the computers that sent men to the moon back in the late 1960s. Traditional media, like the Financial Review, like Channel 9, like the ABC, they've been disrupted by big internet companies like Facebook and Google, and those companies are capturing all the advertising revenue. The result of that is what we call the attention economy. Your attention is very valuable to advertisers, and they want to grab your attention at every possible moment. So the consequences for you as an investor from all this noise that's coming at you every single day, every single minute, is quite a few. In terms of journalism, what it means is we're seeing the speed of information is really what it's all about. Everything has been about getting stuff out there as quickly as possible. Accuracy, content, balance, they now come second just to getting the news out. The second thing is volume. There's a lot more of it. And the reason there's a lot more of it is because the internet, there's no constraint on space or time. You can have information out there every second of the day. We've got more and more voices. But does that making us make better choices? And thirdly, virality. Now, in the old days of media, when I was a journalist, it was ranked by, is it accurate? Is it balanced? Is it informative? Does it help make people make good choices? Today, it's much more about how much is that content shared. It's all about shared virality. For you as investors, it means making poor decisions. Paying too much close attention to day-to-day noise in the markets encourages people like this little boy to throw their money away, to panic about news that's already in the price. It's already reflected in the market. Or they act on market and economic forecasts, like the one I showed you at the beginning of the presentation. Or they buy on greed and they sell on fear. That's the worst thing you can do. Buy when prices are high and sell when prices are low. And Chris of the team on Strategy First will be telling you that the better approach is to rebalance your portfolio according to your own needs and where you are on the risk spectrum. So people will chase returns, they try to market time. These are all mistakes that people make. Now, while that's pretty depressing, I admit, there are some things that you can do to filter out the noise and to focus on the messages that Strategy First is telling you are really important to you as an investor. Again, I'm not trying to downplay the things that are happening in the world today. I'm saying that a lot of the stuff that's happening, reacting to it as an investor is not going to be a good solution for you. So the first thing you can do is to realize how this attention economy works. It's a big machine and it wants you focusing on the information. When you see all this information on your phone or your iPad or your computer, you think, well, it's all free, but it's not actually free. If you're not paying for the information, you're not the customer of the media, you're the product that the media sells. That's how it works. They're selling your attention to advertisers. And those advertisers, whether it be Woolworths, to name a company in the news, or Qantas, or whoever it is that's advertising, they want you looking at their ads. And the way they get you looking at their ads is by having compelling content. It's the content that makes you want to react with either fear or greed. The second thing you can do is realize about news. What happened today is in the past. The market has already acted to that. What happens with returns are about the future. So the new information that comes into the market every day, when I was a journalist, I'd write news every day, and I used to do television, I did radio, I did newspapers. That information is built into prices instantaneously. So when Woolworths comes out with their profit result, the market reacts to that right away before you've had a chance to do anything about it. So what do? It's what happens next that counts, not what happened yesterday, not what Alan Cole is telling you about on the news tonight. Nobody knows what's going to happen tomorrow. And if we did, we'd have a newspaper called Tomorrow's News Today that would make a lot of money. But no one knows what's going to happen tomorrow, believe me. So what do? You diversify and you focus on all the things you can control. The things you can control are what the team at Strategy First talks to you about. How much you're diversified, what you're focused on, the costs of your portfolio, the risks you're taking, what your goals are, and ensuring that you rebalance regularly to ensure you stay on track. The third thing you can do as part of this plan, and I'm going to be a personal one here, is to treat forecasts with skepticism. Now I want to show you a forecast from the Financial Review. This is back in 2003, and this headline was "Fear Replaces Greed in the Stock Market Jungle." We were told that battered investors in Australia were looking for the exits. They were convinced that the traditional long-term approach to shares was no longer valid, and they said that it was time to get out. Really, it was a really difficult time. This is early 2003. I want to show you who wrote that story. That was me. I wrote that front page story in the Financial Review in early 2003. And since I wrote that story, the Australian share market has had a cumulative return of more than 500%, or 9% per annum. Now, it hasn't been 9% every year. Some years it's been up 15%, some years it's been down 20%. Some years it's been up 2%, like we saw in the year of the pandemic. The point is that's been the return available if you've stayed disciplined. So gurus like me, or would-be gurus, who can tell people that it was time to get out of the share market, have now got egg on our faces. And it's part of the reason why I don't do that anymore. I don't make those sort of forecasts. I've got an opinion, but I would never invest other people's money based on my opinion about the future. Really important. Treat those forecasts you see in the media with skepticism. Okay, number 4, focus on what you need, not what's been sold. Now, we see this with health all the time. We see these sort of fly-by-night ideas to keep you healthy, oxygen shots and vitamin pills and tongue scraping and all sorts of things. But if you go along to your doctor and say, look, what should I do? They'll say, have a balanced diet, get regular exercise, get plenty of sleep. That's basically it. It's pretty boring, but that doesn't change. And would you believe it's exactly the same with accumulating wealth? You'll see a lot of this stuff. The media, my former colleagues would tell you, keep on tracking the news, take concentrated bets on the favoured sector today and tomorrow, the 5 stocks to buy now, when to get into the market, when to get out of the market, what prices are wrong, what prices are right. It's all interesting. But that stuff is to keep journalists in a job, and a lot of brokers, by the way, as well, because brokers are paid by people trading a lot. That's how they make their money. Journalists are paid to keep people interested in what's going on in the news. That's how they make their money. What's important and what you need as an investor is quite boring, but true. Focus on your goal. Is it retirement? Is it saving for a home deposit? Is it looking after your kids? Is it looking after your estate? Those are your goals, and they're really important. Can you diversify? That means not taking too much risk in one area. Can you keep disciplined? When Chris and the team come up with a portfolio that's right for you, it's not going to be the same portfolio for everyone. For some people, they can afford to take more risk, or they can live with more risk. Other people might be more conservative. So once you've got your portfolio, it's really important that you stay disciplined, because it's based on what you need, not what the market is trying to sell you. And finally, we'd recommend that you accept prices. That doesn't mean that every price is always right. It just means that the market's collective guess about the price of Amazon or the bond, the government 10-year bond, or where the Australian dollar is at any one moment, that's the market's collective guess. And it's based on all the information out there. The GDP numbers, the inflation numbers, the company earnings, the geopolitical news, all that stuff is already reflected in prices. It doesn't make sense to try and outguess it. It's really important to understand that. So keeping it simple. This is a sort of eat less and exercise more and get plenty of sleep formula for building wealth. Number 5, stop doom scrolling. Don't lie in bed every night looking at all the bad things in the world on your phone. For one thing, you won't sleep well. You'll worry about what it means to your portfolio. What I tell people is, look, it's anxious times already. If you check your news feed too much, it might only make it worse. Digital media companies, they know that bad news will always generate more clicks than good. That's because people are much more susceptible to bad news. So it's our human tendency to pay greater attention to threats to our safety. So set timers on your devices, put the phone away after 8 o'clock, do all the things you tell your kids not to do. No devices in the bedroom. So if I was going to sum this up for you as an investor, I would say, and I'm sure Chris will say the same thing, look at all the things you can't control. They're interesting. The market movements day to day, the economic trends, the geopolitical news, the interest rates, what's happening with interest rates and currencies, the media noise. Interesting. But that's the stuff that you can talk about with the team at Strategy First at the pub when the clock's not running. It's interesting. We've all got an opinion, but you can't invest that way. What you can do, it's boring, but you can act on this. You can design a plan made for you. You can focus on what we call dimensions of return. These are long-term drivers of return. You can diversify broadly so you're not taking too much risk in any one area. You can keep your costs and taxes low, and most importantly, you don't sit there and do nothing. You rebalance your portfolio as the markets change and as your needs evolve. It's that simple. So, summarizing today, the information, I've got a cold. The information revolution is noisy, it's distracting. Data is growing exponentially, there's no filter. Traditional media is pretty weak. Trust is failing. So you need to be discerning and you need to be skeptical. You can't control the noise, so focus on the signal. The noise is what you hear about through the media. The signal is about what you hear about through Chris and the team at Strategy First. And as a cynical old journalist, I'll tell you one piece of wisdom. It comes from Jerry Seinfeld, who used to be the comedian on the TV. He said, look, isn't it amazing that the amount of news that happens in the world every day always just exactly fits the newspaper? The news expands to fill the gaps between the ads. And that's the truth. Chris, over to you.
Thank you, Jim. That was fantastic. I particularly love that last slide with Jerry Seinfeld. I laugh every time I see that. But it's interesting reflecting on what you say when we think about our own relationships with the media. It's very true. It's very hard to control how we I guess react to what's put in front of us. So we have one question just before we wrap up, and I know Dimensional don't like to forecast, but we're interested in your views on what the future holds with respect to the speed and volume of noise as it impacts the investor experience.
I think the short answer to that is it's only going to get noisier. You know, our phones are getting more powerful every year. I'm buying the iPhone 15 soon. They're getting faster. The information's coming out more and more and more. News media companies have been encouraged to publish every second of the day because they can. That means that distractions are going to become more and more intense. And that's why this message is so important. It also highlights to me the value of an advisor. Because if you've got someone who's looking over your shoulder and making sure that you're going to be okay, that's really valuable. And we've got a lot of very famous economists who work for us at Dimensional. They all have a financial advisor because they can't pay attention to everything. That's why it's so important to focus on what you can control. That's my forecast, Chris.
Thanks, Jim, for your insight there. And our clients will know all too well our constant messaging that we've got to control or focus on the things that we can control, ignore the things that we cannot control, and that's going to put us on that path towards financial well-being and achieve the future that we want for ourselves and our families. So we're very fortunate to have access to people like Jim Parker, his experience. So thank you for your time, Jim. We really appreciate it. But we look forward to bringing you guys a bit more content over the rest of the year. Hopefully that was really interesting. Take care and speak to you soon.